Man, it's impossible to find the perfect house. The houses that check all my boxes are like way out of my range, and the houses that do fit my range, there's always something off about it. And they're like built in 1930s, so it's just like a matter of time before I have to gut it and redo the plumbing, the piping, and like the HVAC and the roofing even, right? Like I have a good friend in renovation, but like after the down payment, I'm not gonna have enough to put into the reno.
Do you know exactly what you want in the house?
Yeah, I know exactly what I want in the house.
Okay, just go build it then. You said you know the
How?
contractor.
Yeah, but how? I don't have house building money.
Well, I mean, you could just get a construction loan and use the bank's money to build exactly what you want.
A construction loan? How do I even get a construction loan?
That's the easy part. Click the link in the description. Call the Clear Close. They'll help you and set you up.
You ever think about building a dream home, but you don't exactly have the money sitting in your bank account just waiting to be used? Well, you don't have to, because you can use the bank's money to finance your construction project for your forever home or your investment property. Hi, we're the Clear Close, the mortgage experts that help you get clear to close on your next construction loan. And in this episode, I'm going to be going over the basics of a construction loan. But stick around to the end, because midway through the video, Jason's going to hop on with me and discuss the pros and cons of a construction loan. But before we move on, please support the channel by liking, subscribing, and sharing the content. And if you're thinking about building out your dream home using a construction loan, use a link in the description, the pinned comments, or the QR code that's showing up on the screen right now. Schedule a call with us and let's go over the numbers together. Okay, so we respect your time and we understand not everyone has 20 minutes to watch and learn about a construction loan. So we're going to flash on the screen the outline for this video. You can take a screenshot of it and save it for later. But make sure you save this video to like a watch later playlist so you can always refer back to it. Let's start with the most important question first. What is a construction loan really? A construction loan is a short-term financing vehicle for a very specific job, building a home from the ground up or doing major renovation. Instead of the bank handing you one giant check, a construction loan works in stages. The bank releases money a bit at a time based on the progress you're making on the home construction. We call these releases draws. And once the home is finished, that loan doesn't just hang out forever, it usually converts into a normal mortgage. Now, this is the important part. It's not like the bank just gives you a pile of money and says, good luck with the house, call us when the construction is done. No, the loan is more like having a very strict financial parent who releases allowance to you every time you finish your homework and they get to check it. And here's how the whole system actually works. You get to request funds at certain checkpoints, like a land purchase if needed. Foundation is done, framing is done, rough-ins, plumbing and electrical, drywall, finishes, final inspection. Each stage needs to be completed and inspected before the bank can release the next draw. And that might sound like a lot, but stick with me because I'll explain why this actually makes a lot of sense and is actually very beneficial for borrowers. Okay, so here's the truth. There's more than one type of construction loan. It's just like a HELOC. There's not just one program. So the big three in construction loans are the one-time close or the construction to permanent. This is like the simplest version. You apply once, you close once, and you pay one set of closing fees. And this is simple in the sense that once the construction finishes, the loan automatically converts into a mortgage. And typically people who want to live in the house as their primary residence or like their forever home, this is the typical program that they would use to finance the construction of their primary home. The second one is a two-time close or a construction only. This one gives you a little bit more flexibility, but the trade-off is additional paperwork. And that means additional costs. You take out one loan to build a house, and then once it's finished, you take out a separate mortgage. Why would you want to do this? Well, investors like it because the time between when a construction finishes, anything could happen. Rates could change, the market could shift. So this structure allows some flexibility to shop around and to pivot strategies. The third one is a renovation construction loan. And it's just exactly what it sounds. It's created specifically for major renovations on a house. Think of it like the FHA 203K or the Fannie Mae home style. These things are designed for people buying an existing home that needs serious work. And you might be thinking, well, why don't I just take out a HELOC or a HE loan or a personal loan to get this done? Well, it's usually for first-time home buyers that don't have a ton of cash sitting around. I like to think about these three different products as kind of like dating scenarios, right? So like the one-time close is like you're dating to marry. The two-time close is like you're just keeping your options open, and the renovation loan is you're fixing someone else's mess. Now, at this point, you're probably thinking, well, how do I know how much I can qualify for? Well, it comes down to two major factors, the appraisal and the ratios. So, number one, the appraisals, it's the as completed appraisal. The bank obviously doesn't care about what the house looks like today because it's not done yet. They care about the value that it will appraise at. So, what do they use to appraise the future value of your home? Well, they look at your plans, they look at the materials, the builder specs, along with all the other information that they have available to them to generate an appraisal. When we talk about ratios, we're talking about two separate ratios, the loan to cost and loan to value. Banks want both of these ratios to be at the 75 or the 90%, depending on the program. The loan to cost is how much the build cost the bank will need to finance, and the loan to value is how much of the finished value they'll need to finance. Okay, Peter, so like what are you talking about? All right, let's run through an example. Let's say your total build cost is like $600,000 and the appraiser says the finished home value will be worth, let's say, 700,000. So depending on the loan, the bank might lend you somewhere between 480 and 540. And how do we get to these numbers? So the loan to cost is basically how much of the build will the bank pay for you. It looks at what does it cost to build a house and not what it's worth later. So if the total project cost is 600,000, land, construction, permits, etc., the bank could offer like 80% of the LTC. That means the bank will pay 80% of the 600,000, which equals 480,000. And you need to bring out of pocket the rest, which is 120. Let's look at the second ratio, the LTV, loan to value. This is showing how much of the finished house is the bank willing to own. So loan to value looks at the future value of the home after it's been built. If the appraiser says the finished home will be worth around 700,000 and the bank allows up to 75% LTV or loan to value, that means the bank is going to lend 75% of 700,000, which equals 525,000. That means you need to bring in the balance of the 25% equity into the deal. From the bank's perspective, they're thinking, if we have to sell this house, how protected are we? Right? That's where the ratio comes from. So, how the bank actually decides which ratio to use, and this is a part that most beginners forget about. The bank uses a lower number between the LTC and the LTV. So going back to the example, when we had the LTC of 80% of cost, it was $480,000. The LTV at 75% was a value of 525,000. So the bank will cap the loan at 480 because it's safer for them. And you would have to cover the rest. And to bring this back full circle, the reason why investors love the construction loan, even though it does seem like there's a lot of steps, it's not just about the leverage, it's about the control. The draw system forces accountability and it limits runaway budgets, reduces the risk of paying for work that never gets done because you, the contractor, and the bank all know what the draws are going to be, what can be paid out, and everything has to be approved before payout. This is exactly why construction loans feel slower, but it can save you from expensive mistakes and going wildly over budget. All right, Jason. We talked offline about this a couple times, but and then this is why we triggered doing this video. You mentioned you don't really like doing construction loans. So what's up with that?
Why don't I like doing construction loans?
Yeah. Why don't you like doing construction loans?
Construction loans stress me out. I don't like it.
God, I don't like it.
It's just not pretty. It's not ideal. Like you lack control. I have problems with how fast funding goes. If I'm trying to move quickly so I don't waste time and money building my next project or renovating my current project, and I have to wait for the construction lender's draw team to say yes or no on that draw so I can pay my sub to continue the work. No way. Who's really in control of that project? You or the lender? I don't want to.
Fair.
I've seen projects where it looks so good and everything's progressing, and then you have you have a crazy funder on the draw team saying, no, that's not good enough. Where's the rest of X, Y, and Z? I'm like, come on. Like, you want me to fly a drone to make sure every single tile is put in in the way that you need to see it, it doesn't make sense. Some of the requests.
But I mean, you can make the argument for the opposite, where it does put a control on the contractors, right? Like, there's very little wiggle room. If they want to get paid for the entire thing, then they're gonna have to do the job right.
Possibly, possibly. But it's also extending how long your construction can take. So, because say, for example, you make your draw request. These draw teams only look at it like once a week. So if you don't submit it by a certain cutoff time, you miss that week. And now your next review won't happen for another week. What are you going to do? You're going to have this contractor sit idle because you don't have enough cash flow to float it, or whatever the circumstances, running multiple projects. It's getting hung up on the money side, especially on construction. Downstream, it'll affect everything. What if you were waiting on deliveries for other materials, goods, other tradesmen were lined up, but now you missed that window and that tradesman is not available for 3 months because he's so busy. I can't handle it. It just it
Right.
doesn't sit well with me. I'm not in a rush to build anything.
Mm-hmm.
Fine, go for it. We'll take
Mm-hmm.
our time. It's my primary home. I already have a home I live in. I'm building a new one. I'll 100% do a construction loan. But if it's for
Mm,
investment purposes
mm-hmm.
and my next portfolio project, there's no way I would want to have a construction loan at like 12% interest only and draw out for a year just because managing the draws, all of that. It's already hard with the subs. No one wants to work
True.
right now.
True. But I mean, you have to give construction loans some credit, because for someone without access to equity in their own home, right? Like, they're just starting, um, getting access to funds to build out your perfect home, like, as your first home, that's kind of like,
First
that's really
home?
good.
Oh, don't even get me started. First home. So first time home buyer is going to use a construction loan to build their home from scratch with no experience. That's a very tall order. That's a hard loan to qualify for. Like, do you even know like most people don't even know as a first time home buyer, like how to even get pre-approved. So it's like to have them try to get a construction loan without knowing how build process works, hiring a contractor, architect, engineer, having them coordinate and work together. It's like having, I don't know how to describe it. It's like taking different puzzle pieces from different puzzles themselves and trying to make them work together. It's it You have to have someone in that mix taking the lead. And then that's also another difficult part, because I don't see many first time home buyers trying to build their own home, frankly. Like they look into it, they start it, but for a lender, a contractor, an architect, an engineer to come together for one person on that home is very hard. Like I can imagine someone that's experienced, has owned the home using a construction loan to build their primary home. That could be a good one.
Well, what if someone has experience, like, they're interior designer, that's what they do for work, but they rent currently, or they are a contractor, they have tons of experience in homes and working on
Hmm.
homes. Um, I could see a case
Contractor, I could
to make
see.
for them.
It
Yeah.
makes sense, but that's like
Yeah.
1 in a million scenario. Those are one-offs again. Like
Sure, sure.
interior
Those are
designer
exceptions.
might know how to
Yeah.
buy furniture, but I don't know if they understand how a home is put together.
Mm,
So that's the hard part, because all in one, like just like from construction to permanent loan, there's lots of those programs out there, but ultimately the most successful ground up constructions I've seen are from when a builder and slash contractor starts the process for them. So you're not building, say, for example, a home from a national builder. You have a local builder who specializes in acquiring lots and then
mm.
building custom homes on each lot for their customers. Like
Yeah,
that's
like the
the
frame, just
only
the frame,
time.
right? Yeah.
Like I have a couple clients that are investors in that way because they're the actual architect, builder, designer, and engineering company all in one. So they'll buy those lots in, say, for example, Oregon. This lady I know, she's been doing it for 20 plus years. She, for example, bought a parcel where she split it into 8 lots to build 8 individual homes. But they're not like the major builder homes where it's just like spec homes where they're all cookie cutter. these homes are custom built from the ground up, from foundation. So she took the HELOCs and her own money to lay the initial infrastructure to subdivide the lots. And then now she's selling each individual lot to her prospective customers, and she's guiding them through the build process because she controls it all. And then from there, she's doing all the construction ground up, and then taking the money from the clients who bought the home in phases. So that's how she's been able to build her business the last couple decades. It's pretty cool. She
Okay.
builds really nice homes. So like that
Yeah.
kind of stuff, I see. So it's like a middle ground. Like you have a viewer who's an investor, as an example, and builder, and she's using her skills to build custom homes ground up and then sell them to her clientele.
Right.
But a first-time home buyer, to learn how to do all of that, it's a very difficult task. It's like climbing Mount Everest without having the right gear and equipment and guide. You need a guide. So it's like for ground up construction, you need someone local to where you're trying to build that has that
Hmm.
experience.
But there's gonna be that, like, I mean, we're talking about one-offs again, but the guy that, just slummed it for like his whole life and then
Uh-huh.
started a business and then the business took off. He's making tons of money hand over fist all of a sudden. And he's like, I want to build a custom house, This is
Yeah,
his first
then he
house.
has the money
Yeah.
to do it because he made money hand over fist. He doesn't need a
Right.
construction loan.
Yeah, yeah, yeah. And he's like, I don't need to tie up all my money and buy it right away. I can, or with cash, I can just, you know, uh, do a construction loan and have additional my cash flow to do other things with for investing. I mean, obviously these are one-offs, but okay. Offline, we did talk about we did talk about another reason why you don't like construction loans, which is you don't like the narrowness of it. I think you called it like risk without liquidity.
There's just no real exit strategy. Like if you're like caught in it mid construction, because like
Mm,
no lender. Say for example, I've seen so many projects where they're building ground up construction or doing a very heavy rehab where almost half the home is being rebuilt, basically, right? That's a renovation loan. But I've seen cases where more often than not, they budget, scope, plan, do everything right on paper, lay the foundation, start framing up, and then you run into two issues. Either A, the lender disappears or goes out of business mid construction,
uh-huh.
or B, your projections are wrong and things change and you're caught in the middle of lumber going from 20,000 projected to 80,000. And now your
Yeah.
budget's blown through the roof because
Yeah.
of tariffs or supply chain or
Yeah.
something else.
I mean,
And
but
it's
okay,
like,
that's like a one-off too, though. That doesn't really happen all the time.
what do you mean? It happened all the time. It happened during the pandemic.
Yeah, once.
That's why so
That
many
huge
houses were, what are you talking
but
about?
that
There's so
was
many
like a
unfinished
huge
homes.
true.
Even
I
now,
know
there's still unfinished homes just sitting there selling for
they're
severely
they're
under
getting
market.
finished. I drive around too, like I see construction being done. There's one literally down the street. Someone bought a lot and bought, they did a looks like they're doing a primary plus two
Hmm.
ADUs in my
Hmm.
city, which is really cool and it's getting done.
Yeah, maybe, probably. But that's not a construction loan. That's a rehab loan. We're talking
No,
about
that this is it
construction
was
loans from knockdown empty lot.
no, this was an empty lot. I'm telling you, this was an empty lot
Yeah,
for the
no, I have
longest
one
time.
down the street too. He turned it in. He's
Mhm.
turned it, his house that was beautiful, knocked it down to dirt, dug out the whole foundation, ground up construction. He's been doing it for 3 years now.
Yep.
Like, I know you see the
I
house.
know,
You've
we
seen
drive
it.
by it. Yeah, we
You
drive
drive
by it.
by it. So it's like, it's not pretty. It's not pretty. Like
Well,
it's,
it takes time, but good things take time, right? So if you want
and
the
there's no,
perfect
and
house,
also for your situation too, it's just like that guy down the street. He didn't use a construction loan. I know. Paid cash.
oh, he paid cash? Oh shoot.
100%. He used cash. Hard earned cash. Just because you start going into lending, imagine borrowing 3 million bucks for a construction loan and it takes 3 years to build out at 12%
Mhm.
interest. What
Mm,
is that interest payment per month? Your carrying cost.
yeah.
Like that's like the math behind it. It's got to make sense. But I mean, like here's the thing. I don't like construction loan because of funding speed. Just frankly, it's too slow. It's like we talked about it already. My qualm is the fact that someone at a desk, after we've already approved you for the loan, giving you the money to start the construction, someone still has the ability to say no to what part of the project you're working on. Say you're mid-construction and you had plans for a certain type of build out, but there was a permit change or something. What are you going to do during that construction? That causes delay.
I mean, but that could be seen as a positive, like there are guardrails so that not the lender, the construction people don't have their way, right? And just do whatever they want, or they
Uh,
undercut the quality, or they go around permitting, or stuff that you don't want as a homeowner.
of course.
It's like
So I
it's
mean
like having
that makes sense
a
too.
police, yeah,
Yeah,
someone to
so
police
it
them.
keeps people in guardrails. I agree with you on that because they can't suddenly change materials from like low quality to high mid
Right.
construction and expect to get reimbursed for the full premium tile
Yeah.
when it should have just been a basic tile, for example. So
Right.
they'll only
Right.
reimburse you for the basic tile amount worth, and anything over you have to pay for,
Or like
or vice
building
versa.
outside staircases to the second story when it's not permitted in the city, like or like uh
Oh, that's
or
what the scope of work's for. We're looking at the scope to make sure you're following what was designed
mhm.
to a certain extent. And then
But yeah, but like there's always that couple. One of the couple says, "Hey, wouldn't it be great if like we added a pool mid construction?" And then the other one is like, "Oh,
but that
okay,
would
yeah,
they would have to be able to pay for that themselves or get separate financing for it because it's not in the original scope that was approved for. You can't just suddenly add a pool to it.
exactly."
But what I can
But
tell you,
if you're
go ahead.
not doing a construction loan and there's no police, there's a temptation to do that.
Correct. You would see cost overruns because you're just constantly straying from your project. So yes,
Right.
I can agree with you. The scope would dictate what the guardrails are for your project. But the fact that you have no control of when the money gets paid out to the contractors, like, because more often than not, the problem I see
Mhm.
is not just the draw, it's the timelines get blown out the window or thrown out the window
Mm,
because
yeah.
you're trying to keep everything on a tight schedule to complete quickly, but that really good electrician that's part of your project was available or set scheduled to do that window.
Yeah.
But say, for example, you don't have the cushion to keep him on track because you needed that draw 2 weeks ago to pay the
Yeah.
previous like framer or whoever was there to do it. And now they're not getting paid, and now you're hung up, and not now that the framing's not complete because that guy didn't get paid. The electrician can't come in to do his wiring work, right?
Yeah.
And
Or
that's just an
tile or
example,
something.
or
Yeah.
something like it's just all of these things when it comes to building a home, it follows a
Mhm.
specific timeline, and
Mhm.
certain specialties cannot get to work until the previous person completes their work. And then it causes delay, scheduling. And then what could have been done in like 3 months turns into 6 to 9 months, right? And the other downside for me on this is even though all that stuff's happening with all the draws,
Mhm.
typical construction loans, you're paying interest on the full loan amount.
Mm.
So like the construction lender is getting paid every
Regardless.
month that you're getting through. They're collecting interest. Your carrying cost is gonna go from maybe 3 months to 9 months. So what are you gonna do with
Mhm.
6 months of cost overrun just on interest alone?
It
It's something
it
you
is
have to plan
part
for.
it's something you have to plan for. It's part of the cost of doing business. If you have the cash flow from your job or your business to finance that and be comfortable, like, is it really a big deal? And then like the point about schedule overruns. When has a construction or renovation project ever completed on time? Right? Like that.
Mind you, 'cause I'm anal. I control it.
Because you're the exception. That's why. You're part
Hey,
of the
look at
problem.
wait till you guys see Nikki's construction project. We're on time. It's a massive one. Wait till
Yeah.
you see how that one looks. And guess whose contractor that was?
Same as yours?
Nice.
Oh, nice. Hey, maybe we should refer that person out to people
No,
nearby.
no, 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 no.
No, you want to
He
keep her
only
in the
works on our
pocket?
projects. No, 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 no. That's our ace in our pocket.
Uh, okay.
But you get what you pay for. We're not like I always say, like everybody that I've recommended our contractor to is because cost overruns, he's not cheap,
Mm-hmm.
but he's fair and he keeps time. And anytime I've ever had an overage is because I had change of plans. So it's my cost overruns were always within my projections. And then timeline wise, it's you have to that this is where it's very important you interview who your contractors are. Because a lot of them will say, yes, 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 I can do it all. But let's just say, for example, it's like you wouldn't go to a commercial contractor to build a residential home because it's very different. Like a commercial
Mm-hmm.
architect or a
Mm-hmm.
landscape architect wouldn't be your
Sure.
interior designer, right?
Yeah, that's a good one.
Like, so there's anybody can get a general contractor's license. Some states don't even require a general contractor license. So like when you hire a general contractor, you got to interview.
Mm-hmm. So doesn't that actually make the case that construction loans are beneficial or good? It's a good option for investors who are experienced and seasoned because they probably have good connections with like a builder or a contractor that they trust and
Maybe
then they use. So it's
it would
less
have to
chance
be
of overruns.
it would have to be well, it's not even less chance of overruns. You're gonna have issues. My point though is we're talking about general consumers, right? So it's like if we're talking generally, broad scope, me or you, I would love to build a brand new home from ground up, but it's not cheaper. At least not in California. At least not for the
Mm,
house I want. Like if I wanted to
mhm.
rebuild my house here on a lot and then do it again, it would cost me more than double what it costs to buy one and renovate it. So it's like it's got to make sure it has to be something worthwhile for you. Because if it's a primary home, it wasn't worthwhile for me to build from scratch.
Right.
If it's a investment property, the numbers have to make even more sense for it. So, so that's why we have construction loans being a certain percentage of the business, whereas renovation, rehab, that's a larger portion of the business's opportunity out there. So there is a time and place for it. It's just you've got to run the numbers and scenario. Is it worth the effort? Like unless it's like again your primary home and money is no object, and you don't want to risk your money, like you said, because you have it in other places where it's generating more income.
Yeah. So now we want to turn the question over to you watching this on your phone, your computer, or your TV. What do you think about construction loans after hearing Jason and me discuss about it? What would you do with an extra, let's say, $250,000 line of credit if you were to get a HELOC magically? Um, would you rather use that instead, I guess? We want to hear from you guys and we want to know your thoughts in the comment section below. All right. And we might actually feature your comment in an upcoming episode when we respond to our comments. We might do that like quarterly in 2026. And remember, use the link in the show notes or the pinned comments or the QRs that's popping up right now to schedule a call with a clear close, whether you want a construction loan, a HELOC, a DSCR, or whether you want to get into real estate investing and you just don't know where to start. It doesn't matter where you are in the process. We can help you and guide you through that. So thanks for watching and we'll see you guys on the next one. Bye bye. Why did you clap?
I don't know.
Thanks for watching. Subscribe to the channel for more. And if you want to learn more about investing in real estate and financing methods, click the link on the top. Or if you want to learn about HELOCs, click the link on the bottom.
And if you don't like construction loans and you're on the same page as Jason, unsubscribe. Just kidding.